Or sell a house, finance or insure a house, or stuck with a house and don't know what to do? Florida Talk Real Estate has been your local one-stop real estate shop since 2012. Get the advice you need from your local real estate pros. Here are your hosts, Jim DePola and Johnny C. live on Real Radio.
That's right. Welcome to the Florida Talk Real Estate Show, the number one news and information provider about all things real estate in Florida, going on for 13 years now. That's right, 13 years. We've been telling you what's going on in the market, and today we've got a lot to talk about. You want to get some good news in the real estate market? We're going to talk to Komarinetz from Brightway Insurance, Juno Beach today, because believe it or not, there's some bright spots in the insurance market, and we're going to talk about that today. We're also going to be talking about the up and down rocky road of the mortgage industry right now as far as interest rates, and talk about where we are there. And we got a bunch of creepy critter stories. You know how I love those creepy critter stories from Florida, so we're going to talk about a couple of those today. But right now, I want to say hello to my co-host today is Komarinetz. How are you doing today?
Doing well. I don't know about co-host.
Come on, co-host.
You're hosting.
Yeah. Okay.
You're hosting.
And then we have co-host, Jimothy, the producer. How you doing, Jimothy?
I'm doing well,
doing
gentlemen.
good?
How we doing today, huh?
Yeah,
Happy Saturday.
Happy Saturday. Johnny isn't feeling well today. I hope he feels better. Mike, I knew Mike was going to be gone this week, but I saw some Instagram photos of mountains and water, so I think he's out of the country right now. So I'm hoping he's having fun.
Playgirl photo shoot, right?
Yeah, exactly. Right. I'd have to tell you, that's funny. In my first wedding, when I got married in Key West on my first wedding, we had a Playboy photo shoot in the as part of the wedding.
Interesting.
I don't.
The bridesmaids all dressed up in bunny outfits?
No, what happened is we hired a professional. That wedding was so crazy. We hired a professional photographer to come down that we knew, and we rented out, I guess, a room for him for 2 days or something. We were staying like 5 days, right? We rented out a whole compound down there for 5 days, had a 24-hour bar for 5 days. It was crazy, right? Because we had the whole compound. It was like 18 rooms or something, right? So we just had a big party for 5 days straight. So this photographer said, "Hey, you got the compound you're at is gorgeous. It was really greatly landscaped and everything. It was right off Duval Street." He said, "Can I bring some models down? So when I'm not shooting the wedding, can I do some side shoots?" And I'm sure. I go, "Sure." I didn't even think about it. It's like, sure. We were so busy, we didn't want to think about it. So we get down to the compound. We get down to the place. It was called the Red Rooster, right?
Of course it was.
It was kind of funny. The Red Rooster.
You can't buy that.
Right. The Red Rooster. It was a. I think it still is. It's a predominantly gay hotel, and it's more for males than females. Right. Red Rooster. Right. But because we rented the whole thing out, the owner was so happy with us. But the manager hated that heteros were getting married in there, and he was so mean to us. He was this German guy.
Reverse. That's
it was reverse discrimination.
Like, whatever. Yeah.
And the owner was so nice because we rented out 18 rooms for 5 nights or whatever, right? But anyway, so the photographer comes, and while we're getting ready for the wedding or whatever, the day before, he has these beautiful models there, and they're doing all these nude shots all over the gardens on the compound. And the guys that were here for the party and the wedding, they were so happy. They were so happy.
How'd the wives and girlfriends feel?
Yeah.
I don't really know. I didn't ask, but the guys were very, very happy. And so was my father-in-law during that weekend. He was very happy about that. That time was so funny. But anyway, I'm sorry. We got a little off track there. But
want to buy a house, sell a house, stuck with a house, don't know what to do?
A photo shoot at a house.
Yeah. So I wanted to start off with a couple of creepy critter stories because I love those guys. So we're going to talk about a couple of things. I read an article on one of the Fox News stations around here, local station, and it's a station out of Cape Coral. And what they're saying is the Florida Fish and Wildlife group, the government agency, they're proposing a regulation to the iguana hunting rules. And Ross, I don't think you were here when we've talked about iguana hunting, but we've talked about it a lot. Like,
sure.
I mean, I think
there's all these rules and regulations about
like how you
mainly kill them and right, and what you can do with the iguanas and all that. right? And how you can't kill them in a certain way, you could be charged with a crime. But they're changing the iguana hunting rules where they'll allow hunters to sell. What is it? They're going to say they're going to allow them to sell. And let's see, photo. Okay, I'm sorry. Hold on here. I want to say it the right way. Get rid of invasive species. Iguanas. Okay, hold on. The main change would be allowing anyone that traps these iguanas to sell them out of state. So they're going to create a regulation where you can sell these iguanas out of state.
Once they've been
trapped,
euthanized, or trapped,
or trapped. Well, it says trappers, right? It says once. This main change would allow anyone to trap these iguanas and then sell them out of state.
So it can cross state line.
So
no matter where.
How crazy is that?
You know, maybe somebody in Wisconsin. I remember back in the 90s, like people.
That's
really
how we got the iguanas here in the first place.
Well, you know, maybe somebody in Wisconsin wants an iguana. And,
so
let's somebody down here
let's just put our invasive species to somebody else's place to make an invasive species there.
This is trapping them live.
Probably wouldn't survive in a cold Wisconsin winter.
Well, no, they'll fall out of the tree. They'll be like, they'll be fake dead.
But this is trapping them live.
So it says trap.
For the
I'm assuming, yeah.
So for the purpose of pet. Being a pet.
The article, that's funny part is the article doesn't say. They talked about this one trapper that specializes in doing this. He actually takes excursions. He takes people out to go iguana hunting, right? And that's what he does. He has like a tour, like an eco tour.
Hey, I've got the same tour. We're just going to go down Congress.
Yeah,
come. Exactly. I'll meet you at the Wawa on the corner,
and we'll walk. Your BB gun. Get your BB gun, and we're going over there. Oh, $7
BB guns though. $7 and a cup of coffee.
Exactly.
Let's go.
But anyway, he has a tour where you can go out there and go kill and trap the iguanas, I guess. So they interviewed him and the guy was like, "Yeah, we really think this is a good thing. Anything we could do to get rid of these species is a good thing." And I'm like, "Yeah, so you're going to take these animals that you don't want here." And then you say, "Hey, why don't we give them to Georgia or North Carolina or South Carolina?" It's so ridiculous.
Well, I guess
I don't know.
Well, being able to cross,
people are still buying them. Yeah, like people are buying them for pets.
Yeah,
and so, hey, I got one.
I think it's sell for pet, or I mean, isn't there a market for the meat?
Well, I think in like I might be wrong about this, but I thought like in Peru and Uruguay and Paraguay, I think that they eat these things.
Well, I'm sure they don't have a shortage of iguanas, and they're trying to import iguanas.
No, I'm not saying that. Yeah, but I just thought it was weird. I was like, well, what the hell are they going to do with these things when they're when they move them out of state, and who's going to want them? Other than like you said, like people
JC's
for pets and stuff
store.
like that. Yeah.
Either pets or the meat. It's the only thing I can think of.
Yeah,
that it would be used for, and the fact that this can happen close to a state border, so now it can cross into Georgia or Alabama or something like that. If you're very close to that, or even shipping it outside of that area, like you say, maybe there is somebody in Wisconsin that wants it.
Yeah, so it's kind of interesting. So, and remember, we were talking. I think it was a couple weeks ago. We were talking about how the guy was making omelets out of the eggs. Remember that?
Like 37 eggs or
49 or something.
Something crazy. Like, just
I'd
rather just have my.
The thing that freaked me out is like their shells aren't like hard like chicken eggs. They're like soft and rubbery. So you got to poke a hole in there and then squish out the yolk to make the omelet. I'm like, I don't know if I could do it. I mean, I could do it, but I don't know if I'd want to. That's good eating.
On a bet, maybe.
Yeah. Here's another thing. Who knew? I did not know this. I've been living in Florida for 50 years, and I did not know this. Coyotes in Florida. Did you know there was coyotes in Florida? I had no idea.
Yeah.
Did you know that?
Yeah, I can hear them at night.
That really?
Yeah.
That is so wild. This lady, it was kind of interesting. Some Channel 5 reporter was doing man and woman on the street interviews and asked somebody at a park, what's your biggest complaint about whatever living in Port St. Lucie? And she goes, the coyotes. And the reporter's like, what? And she's like, yeah, there's such a bad coyote situation in my neighborhood that I can't walk my dog. And she's been taking the dog and driving it to another area of the city so she could walk her dog every morning because she's afraid the coyotes are going to come out and attack her lab. She has a chocolate lab, it looked like. And this is the funny part. So she has photos and videos of coyotes in her area. Guess where they are, Jimmy?
I'm gonna guess in your backyard.
Oroso.
Oh, okay.
On Oroso, right off of Oroso.
Right.
And
Well, they're all
and
over.
Crosstown.
There's
Crosstown.
There's a section of land that's, I don't know, maybe 3 acres, 4 acres big. It's just down the road from our current house where we are now, and there's coyotes that live in there.
That's so wild. I didn't know. And then,
so I mean, it could. That's why when you ask, I'm like, oh, I don't know. It could be anywhere in the city because I mean, Port St. Lucie developed so fast that all the wildlife that was there. I mean, they didn't even have a chance to migrate anywhere.
Right. Exactly.
So I'm sure a lot of it just found whatever little pockets were left of land that they could stay in.
Well,
and that's why you'll see them, I'm sure, all over the place.
Yeah. So in this report, in this news report, they called up the Florida Fish and Wildlife group, and they were like, "Yeah, coyotes are in all 67 counties. They're part of our ecosystem, and they said an important part of our ecosystem, and they're here to stay." And they were like, "Hey, sorry if you got coyotes in your neighborhood, you got coyotes in your neighborhood. That's like saying you have a lizard in your neighborhood, right, or something, right? What are you going to do about it?" So anyway, I just thought that was really interesting. Then the reporter said when they got home that night, they spotted a coyote in their neighborhood, and they had never seen one before. I was like, coyotes everywhere, what you learn. But I had no idea Florida had coyotes. I really didn't know that. I knew about the panthers and stuff, and bobcats, but not coyotes. I didn't know
sometimes at night, because Juno has a big patch of land.
Yeah.
Kind of on Donald Ross, and that kind of
that scrub park, this scrub
and like sometimes at night you'll hear
I have to listen more carefully because I live not too far from there.
Yeah, and I'm sure Du Bois probably has them sitting in the woods somewhere.
Yeah, especially I mean further inland you go where there's still more open area. I'm sure there's a lot more wild boar that's out there. You wouldn't necessarily think of that with Florida because a lot of us think the coastline. Right. I mean, most people.
That's what everybody thinks Florida is.
Yeah, a lot of times. Yeah.
Go 4 miles inland. That's what Florida is.
Yeah, really, a lot more than that than there is the coast. But that's what gets the pub. Miami. I mean, television shows are made about it and that type of thing. And really, when you go inland, it now that citrus has really been reduced in this state because of the canker problem that we had in the past. Really, with cattle, beef. Equestrian has really taken over a lot of the main part of what Florida is, inland, right?
I saw that there was supposed to be a big development project in Delray, out in the agricultural reserve area, and they turned it down. And I was like, wow, I was surprised because it seems like the county commission's been very pro-growth. And it was funny, when I was a newspaper reporter in the 80s and 90s, there were a lot of politicians there. We were fighting with a lot of growth at that time. And the politicians at the time, the county commissioners, had made basically promises that they were going to keep huge swaths of western Palm Beach County as farmland, and they're going to keep it that way because they felt it was important for the long-term security of economics and other things. And then, they make all these regulations, and then over time, everybody forgets what happens. And then new people come in and they don't know why the old laws were done. And then they complain that, they're too restrictive now. Right. And they were designed to be restrictive because they were trying to protect the farmland. Right. And then they say, we're just going to go ahead and let you put in, the 500 homes there. Right. And that's just what kind of is going on. So kind of interesting to see all the changes down here. And speaking of changes, I got a call. I'm getting calls recently from banking institutions that want to know if I want to become a foreclosure agent. Right. I think that's kind of interesting. Right. Now, I've had these a couple of years ago when there were no foreclosures on the horizon. And I used to laugh. It's like, wow, I guess you've got a audience of one that you're talking to with this pitch. But I'm getting more and more calls on them now. So we're going to take a look right now, just for the heck of it. We're going to take a look and see how many foreclosures and short sales we have on the market now, so to see if we've gone up. Well, our inventory has gone up. The last time we looked at total inventory in South Florida region for residential properties for sale, we were at like 62,500. We're now at 63,600. Not a gigantic thing, but when we started talking about this in November, we were at 40 something thousand, like 42,000 properties. Wow. Yeah, so we've increased 50% since we started doing these kind of weekly reports. So out of 63,000 properties for sale, there are, drum roll please, let's see, there are 270 foreclosures for sale. And there are, out of 63,000, and there are 166 short sales for sale. So what's 270 and 160? 436, right? 436 properties out of 62,000 for sale. That are short sales or foreclosures. So my question is, did I respond to those bankers that asked me if I wanted to start becoming a foreclosure agent?
I mean, you
or
should
did
have.
I
You would have
ignore
had
the phone call?
436 transactions,
Yeah,
future transactions.
and this whole area, I mean, this area is gigantic, right? I'm just laughing. So, and the funny part is when you work the foreclosure cases, what the banks do is they give you a greatly reduced commission. Right.
Oh, wonderful.
Yep.
Let me sign right up for that.
But on top of it, you've got to carry the house if it's vacant. So if it has a pool, you have to pay to get it covered and protected, or keep it clean, right? To pay for the pool service and the lawn service and make sure the house is secured. Oh, no. And you got to do all of that stuff for them.
No wonder they want to get.
And then you have to do all that stuff and then save the bills for it, and then they'll pay you after you close. But a lot of times, at least back in the day, they didn't pay you when you closed. Like, you might got your real estate commission, but they didn't give you your money back. And then you have to sit there and fight for your money. And I knew a lot of foreclosure agents during the height of the foreclosure market that went bust because they had so much monthly bills and the banks weren't paying them.
Oh, man.
That they couldn't carry the cost and they went bust. Right. So no, I'll pass on the foreclosures. Thank you.
When they ask you that, do you have to become exclusively just for foreclosures?
No, you
can do both.
Yeah. Okay. And what happens is you get vetted through the bank and then you become one of their preferred realtors. Okay, and then they just assign you properties.
Right. Okay.
Hey, work this property, work that property, work this property. Hope we never get back to that market again. That was not a fun market when we started out that.
Well, one of the key things that happened back in 06, 7, 8, wherever you want to start that time frame, when the housing market crashed, was the value of the homes went way down, right? And that's what made people so far behind and get so where they can't, even if you sell it, you're, obviously upside down, right? So, and that's where you started and really found your way into this. That hasn't happened yet, has it? I mean, the prices have come down a little bit. The values have come down maybe slightly, maybe slightly. Yeah. So that's probably part of the reason why we haven't gone back into that type of a market, correct?
Right. If this is what I'm predicting, is that, and whatever it means for guys, right? It may sound so officious. This is what Jim is predicting. But what I'm thinking is right, exactly. So what I'm thinking is that if our unemployment rate gets into the high 6s or low 7,
okay,
we're going to have a big problem, because there's a lot of people out there that are just a couple of paychecks away from not being able to carry all their bills, because everybody is highly leveraged right now. But everybody's paying their bills. We don't have a high delinquency rate on cars. Right, we don't have a high delinquency rate on credit cards. Johnny C and I, who isn't here today, we've talked about this a lot. Johnny thinks it's a lot worse than what the reports are showing, and that there's a lot more weakness there. I wouldn't disagree with him on that, but we won't know until people really start getting unemployed, and in a large amount that the market can't absorb. So, for example, we're losing a lot of federal government employment people right now. I think we've lost at least 50,000 federal employees right now to unemployment. Some of them are still on unemployment benefits and everything, so they're not really fully unemployed yet. But if those people seem right now to be somewhat being absorbed back into the system, getting other jobs. But if it starts turning out where people just aren't hiring and more people are getting laid off, that's when we're going to have an economic problem in the real estate market. And at first, it'll be okay for the first wave of people that are in trouble. If they can't make their payment and they miss one payment that's 30 days later or longer, they won't be able to tap into that equity of the house to help them out in their financial problem. So the first wave of people, they're going to have a lot of equity in their house if we get into a crisis. And the first wave that sell their houses to get the equity, they're going to do the best out of everybody because they're going to be able to save a lot of the equity that they built up over time, because it's going to take some time for the prices to start catching up with the bad economy. But the ones that kind of struggle and really stay in their house and fight to keep the house, but there's no real economic way for that to happen, those are the people, then the prices are going to start dropping, then their equity goes down. And then if they do sell, they lost a lot of their potential equity by trying to save the house that they weren't going to be able to save. It's a very sad situation when you see that, because a lot of people, houses are their house. And, that's their home. And it wasn't just a piece of stock they bought for most people. It's like where they lived and they raised families there and everything. So the idea of having to sell the house when you don't want to, it's a terrible situation to be in. But you don't want a terrible situation to make things worse by making poor decisions for you. None of that's happening now. Okay, so none of that's happening right now. There might be a few people out there in trouble, and if you are, we can help you. Please give us a call. We're not going to just try to figure out how to sell your home. We're going to figure out your best options. We have a whole group of people that can help you. We have Mike Rao from the mortgage firm to see if there's any way to do refis or get you out of the jam with your loan. We have the law office of Paola Krasker, who does loan mods, foreclosure defense, bankruptcy consultations. And we have short sale innovations, which is part of the law office of Paola Krasker, in case you needed to negotiate a sale with the house for the bank if you are upside down. We have all that stuff for you, and we have it for free. We're not going to charge you to figure out what this is. You're going to call us. We're going to figure out what your problems are. We're going to figure out the different ways to solve it. And then you decide how you want to handle it, looking at all your different options. And you don't get charged a dime unless you hire somebody to do something. And if you choose not to, that's okay too.
888-973-7828. If you find yourself in that type of a situation, or you just want some free consultation and finding the right realtor, 888-973-7828. Hey, you need some homeowners insurance? There's another number. You can call that number too, and you can get a hold of Ross Komarinetz from Brightway Insurance, Juno Beach.
Thank you, Jimmy. I just want to do a shout out, and then we'll run out the half hour, and then we're going to jump into some good news about the mortgage rate. We're going to go from doom and gloom that hasn't even happened yet, right? We're talking about doom and gloom that doesn't even exist right now. And we'll switch to some real news that's actually happening about good stuff that's happening in the insurance market. But I want to do a shout out to Joanna and John. John called me. Well, actually, John and Joanna were referred to me through an agent from Keller Williams, who said that they needed somebody to sell a house in Aberdeen and Boynton Beach. John met with me and hired me to sell his mom's home. I took the listing in November, and we didn't close it until last week, which was about 100 days or so. And well, more than 100 days, right? November 90, yeah, like 180 days. Now, the reason why that happened is this neighborhood is a membership equity neighborhood. So this was a 2-bedroom, 2-bath, really nice attached villa, which is like a single family home, but they do have one common wall. And it's in a great gated community, but it's $63,000 membership equity on top of the purchase of the house.
Right.
And then you got to pay another $15,000 to $35,000 a year every single year after that for either social membership equity or golf membership, on top of your monthly fee, which is $670 a month for your homeowners association fee.
Oh, okay. So that's separate, huh?
It's separate.
I'm surprised
right?
they don't. Okay. All right.
Yeah. So the $670 is to take care of the community, like cutting the lawn and making sure the community's okay. And then the other $35,000 membership a year is like, I want to go golfing and I want to eat at the restaurants and that kind of stuff.
Right.
So that's where that's coming from. So anyway, they came to me. John it was kind of interesting because John is a banker from New York and he works for one of those big, Manhattan, Wall Street kind of things. And he's really deep into banking, into like the bonds and stuff like that. So he's like a division chief for one of those banks. So it was really interesting to talk to John as we were going through this, because I said to John, this is what's going to happen. Now, this was November, right? So this is at the season for, this is a 55 and plus community, Aberdeen. So, and it's also membership equity. So there's a lot less people that want to buy there because of all the high costs, but also it's 55 and over. So you have a season. So if you don't get the house sold by Easter, right, you might be waiting until next season before the house is sold. So we put the house on the market for a higher price. And I said to John, if we don't get it in January, we got to drop the price dramatically in order to find our buyer before the season ends. We didn't really get much action on the house. We had a few hits at the first few months of the year. Then we dropped the price as we planned. And we started getting action, but it was still slow. John was getting a little nervous that we weren't going to get it done this season. So he started saying, let's maybe put it up as a rental at the same time that we're doing as the sale. And if I have to rent it, I'll rent it. And I said, well, hopefully we'll get somebody right before the end of the season. And when you know it, that's exactly what happened. So we went under contract March 11th. So that was November 21st to March 11th is how long it took us to get our buyer.
Wow.
But we were expecting that. We were expecting a triple digit days in this neighborhood. That would be normal. But we were very cognizant. The reason why our house sold, because there were a lot of units that were for sale that didn't sell this season. And now they're going to be stuck trying to sell during the summer, which is going to be very difficult. So we were very cognizant of the season and pricing it correctly to make sure that our unit got sold over other people. So congratulations to John and Joanna. Thank you so much for trusting us. John is still keeping in touch with me. I think we built a little bit of a professional friendship there. And Joanna, John's mom, was moving into a, I don't think it's an assisted living facility. It's like the grade below assisted living facility where you can still operate on your own everything, but you're in a
You're just kind of like living together, just like senior living.
Senior living.
Whatever.
Yeah, something like that. So she's up in Vero. She's loving it. She says she's already made a whole bunch of friends and she's having a blast up
That's
there.
great.
So I'm really happy. So Joanna, John, thank you for trusting us, and we got the job done. And it happened when I went to the closing table. I was like, John, I know you're a little nervous, but it happened exactly the way that we expected the day we met. And he goes, yep. He goes, you nailed it. So we were really happy. So congratulations.
Nice
We're going to go ahead and take a break
Okay.
right now, if you don't mind.
Sure.
On the flip side, we're going to talk to Ross because we've always kind of stayed ahead of trends that have been happening in the insurance market. Thanks to Ross, he gives us such great perspective, and we've saved so many people money over the years through Ross's advice. And we were usually way ahead of the curve of when the newspapers or in the news started picking up what was happening in the insurance market. Ross has some really good perspectives about the insurance market to share with us today. And it's not bad news. So if you want to not be depressed, then you got to stay for the next segment.
All right. Well, you got a question for Ross? This is a great time to give us a call. 877-927-6969. Let me give you that number again. 877-927-6969. I'm just standing here. I'm waiting for that phone to ring so I can answer that call that you have. Maybe you got a question for Ross about homeowners insurance. Maybe you got a question about real estate, selling, buying a house, mortgages. We can do that too. 877-927-6969 right here on Real Radio. Now we're going to be back and talking to Ross here just after a 3-minute break on Real Radio 92.1.
The visual aid you need for all the freaky stuff we talk about on the radio. Find it at realradio921.com. Here's what's happening with the weather on Real Radio.
I'm CBS 12 meteorologist Charlotte Pearl. We're expecting those temperatures to continue to rise. A few passing clouds, but lots of blue sky will allow our temperatures to climb into the lower and mid-80s. That strong onshore breeze will remain in the forecast, leading to a high rip current risk and a small craft advisory. Just be extra careful there out in the waters today.
This report is sponsored by Smith, Ball, Baez, and Prather Injury Lawyers.
Injured in an accident? Call Smith, Ball, Baez, and Prather for your free case evaluation. Call us at 500-HELP, 500-HELP. HELP is just a local phone call away.
Hey, it's your boy Johnny C here, host of Florida Talk Real Estate. They're tops when it comes to helping people buy and sell houses. But Florida Talk Real Estate is so much more than that. For 5 years, I've watched these guys help thousands of our listeners with any real estate need. They couldn't do it without their sponsors, who are experts in their fields. Check it out. Jim DePola, powered by Keller Williams Realty. Their team specializes in helping people sell their house for top dollar, and buyers get great deals on the purchase of their home. That's what they did for me and my family, and I couldn't be happier that I hired them for my real estate transaction. Mike Rao from the mortgage firm is one of our favorite guests on the show, and he is the mortgage guy. Whether you're looking for a refi or a mortgage to purchase a new home, Mike Rao will get you the answers you need. The mortgage firm is licensed to do loans in Florida, Alabama, Tennessee, and Georgia, and they have local offices that cover all of South Florida. So if you're thinking about a refi or a new mortgage, go to the mortgage guy, Mike Rao, and find out what he can do for you. The Mortgage Firm, Inc., NMLS 189233, Florida license MLD 78, equal housing lender. The law office of Paul A. Krasker has been specializing in real estate law for nearly 25 years and has the professional team you need. Upside down with your house, Paul's team can help you conduct short sales, loan modifications, even if you're behind on payments. They also help you with foreclosure defense and bankruptcy. They can even help you get a student loan modification and repair your credit to get the score you need. Paul's full-service team has helped thousands of our listeners, and they can help you too. Trident Title LLC is the largest privately owned title company in Florida. When you need a title company to complete a refi, home purchase, or sale, Trident Title has got you covered. Not only do they offer competitive pricing, Trident Title has attorneys on staff to make sure if you have bumps in the road declaring title that you can get the job done. Beware, not all title companies in Florida have attorneys on staff. Trident Title does and complies with all the new federal regulations released last year. Ross Komarinetz, owner of Brightway Insurance, has been helping our listeners get great rates on homeowners insurance plans. Haven't checked your homeowners insurance policy in a while? This is a great way to help reduce your monthly mortgage payment. Ross can also help with renters and auto insurance. Ross is only a phone call away and can usually get the answers you need same day.
Call Ross today at 561-425-6228 or drop by his office at 873 Donald Ross Road in Juno Beach.
So now you know why I'm happy to be part of the Florida Talk Real Estate Show, the longest running real estate show in Florida. And all these sponsors are just a phone call or a click away. Just call 888-973-7828. That's 888-973-7828. Or go to floridatalkrealestate.com. That's floridatalkrealestate.com. And don't forget to use the most accurate search engine to find your new home or ask for a free home valuation because floridatalkrealestate.com has you covered. That's floridatalkrealestate.com.
You're listening to Real Radio 92.1, and we are an iHeart radio station. This is Florida Talk Real Estate with Jim DePola and Johnny C. Got a question for the show? Call us live at 1-877-927-6969.
Hey, everybody. Happy South Florida. This is another beautiful Saturday in sunny South Florida, and this is the Florida Talk Real Estate Show. I am your host today, Jimmy D, also known as Jim DePola from Keller Williams Innovations, and we've got Ross Komarinetz here from Brightway Insurance, Juno Beach. How you doing, Ross?
I'm doing well. I want a radio name like Rossi K.
Rossi K?
Rossi K.
Oh,
GD.
we could do that.
Sure, yeah.
And of course, we've got producer extraordinaire Jimothy, how are you doing today, Jimothy? Okay.
Doing mighty fine, Jim. How are you today?
I'm doing.
Nobody has ever asked you. How are you? Today?
I'm doing mighty fine.
Good.
Didn't get to say hello to everybody that was on Facebook and YouTube, so I'm going to do that now because Johnny isn't here today. He's feeling a little under the weather. Hope he feels better. Hey Nate, thanks for reaching out to us. Cinnabar, I think you're new, and thank you. Share and like our page, and if you have any questions on real estate, let me know. Hey Mom, good morning. Susan, great to see you again. Hope the puppy's doing great. Francis, good morning. And Elizabeth, Betty, how are you doing? Happy Easter to all of you, and happy Easter to everyone out there. Hope you enjoy the weekend. It's beautiful out there too, guys. Is it pretty nice out there today? To me, it looked pretty good.
Oh yeah, gorgeous.
Yeah.
There's some wind. It's not terribly hot this morning. Last night was a little cool.
Yeah. Yeah, it was. It was kind of nice. I had the windows open, and but all I heard was the constant beep, 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 because what they're doing on my end of the street is beach renourishment, which I always laugh about, right? Because all they're doing is sucking sand that got sucked away and then putting it back, and it's so expensive. Remember, we learned that sometimes they have to truck the sand in from other areas, but they need the sand to match the sand that's in the area that they're putting it back. I was like, I didn't know they did that. That's pretty crazy. But our beach was so bad that there was basically no place it was almost impossible to walk. The dunes, the water was almost hitting the small dunes that we have. And the water had been, the sand had pulled away so much that the coral bed, that's what you were seeing. You're walking basically on coral out there. And they've been sucking out the sand and dredging it and, putting it back.
Right.
And I didn't realize this. It makes sense, though. Once they start that, you can't stop. You got to do it 24/7 until you're done. Because if you stop, it sucks all the sand that you do it. So it's running 24/7. So at night, all I hear is beep, beep, beep from the bulldozers moving the sand around and backing up.
Gotcha.
And so all you hear all night long is beep, beep, beep. But now it's farther down the beach, so I don't hear the noise as bad. But it's been like that for a couple of months now. It's so much money to do that. And I'm like, wow, you just have to keep doing this over and over again. And the other thing that's really amazing to watch is how close that water is to the dunes and how close the dunes are to the buildings, right? It's just a matter of time, right? That these buildings are going to be useless.
I mean, I feel like they've been saying that forever.
Yep.
Well, not in our lifetime. At least not my lifetime. I'm older, right? You guys, you Ross, you're the young whippersnapper in the room. You have to worry about it more than me.
Yeah. But I mean, you see pictures of like a overhead view, and I don't know, it looks like the water line hasn't changed much.
Yeah,
pretty much. Well, we learn to adapt. That's what humans do.
But if you look like an old aerial photo of like the coast and like the buildings, it doesn't look like they're that much closer.
What I keep the reason I have a funny face on right now. I keep thinking when I think it was St. Augustine. Yeah, it was St. Augustine where they did the Fountain of Youth thing. That place where they do the Fountain of Youth up in St. Augustine. They have these maps of what Florida used to look like in prehistoric times and all that. And Florida was gigantic. Like the bottom part of Florida was gigantically wide. It was like this big, probably 1.5 times the width it is now. And then they show you over the centuries how we ended up getting to where we are. When you look at that big long time period, Florida is not going to be around. At some point we're going to be like, I'm joking, but Atlantis. Right? Like we're going to be underwater, whatever, if Atlantis exists. I'm just saying. But
I've been there.
But for us, but then you read like what the scientists say the water's increased like 1/4 inch, over the last 50 years. And so you never know. But I'm telling you, that water's getting close.
Yeah.
So anyway, hey Magali's here. Good morning. Hope everything's going great with you. Now let me see. So, Ross, we've talked about insurance now on this show for over 12 years. Just some of the highlights of the years of trying to help people wind their way through the whole insurance stuff. I remember back in the day when we were talking about gap insurance. Remember gap insurance? That was the type of insurance where you could pay a lower policy for your hurricane insurance. This is my memory.
You could insure your deductible. So
Right.
you could
It
have
was
if your
insurance on your
deductible is like $20,000, you could, buy a policy that would cover that $20,000.
And a lot of people did that at the time, and it saved them money. It saved them a lot of money. And then there was a period even before that. Now that I'm just going back memory now, it's popping in my head. Even before gap insurance, where we helped out a lot of people, you were telling us when the insurance premiums were going down pretty dramatically, and nobody was really talking about it back then. But you were like, man, I'm writing these policies for people, rewriting policies completely, or saving a lot of money. And then, so we went through that cycle, and you helped out so many people. Called like, hey, I want a free quote, see if I can save some money. That was awesome. Then we had the situation where the insurance started getting more expensive.
We did third nail too. We were kind of
Thank you. And we saved so many people. It popped in my mind, but I couldn't say it. There were so many people that we helped with the third nail company. So can you explain third nail and how that works? Because I just had that situation with another house.
It's not as amazing as it used to be. The ratings, the discounts, and things like that have changed a little bit. But basically, in your roof, the way the roof is actually attached to the house is by a metal connector. Most people think of that as a hurricane strap. But a lot of the times on older homes, there are no straps. There's no metal connector attaching the roof to the actual home. So on the wind mitigation report, that used to be a very significant discount, whether or not there was a metal connector. Or if there was a metal connector, maybe it didn't have the required amount of nails in the metal connector, just because roofers get lazy. It requires 3, maybe they only hit it with 2. So again, that would be no discount in that section. We became aware of a company that would go up in the attic and put the extra nails in if that was the case, or they'd actually install metal connectors that would then qualify them for that discount. And back when we were doing that a lot, the work might cost $1,200 to $1,500 or something like that, but you'd immediately save $2,500, $3,000. So that was one thing that we were, trying to push to get people to, hey, look at your wind mitigation report. You might not be getting this discount. We can help you get it and save money on your insurance.
And it really helped out. And we still have people use that service, Third Nail, great company. If you said, hey, I'm interested in that's happening to me, give us a call. We love to turn you on to Third Nail. But they're always really great, been very, very professional, and really have saved a lot of people money, a lot, through this thing. I remember one guy, his insurance rate he was on the show. He was going up $6,000 a year.
$6,000.
And this was like a 1,500 square foot, 3-bedroom, 2-bath house. It was some Taj Mahal. And the premium was going up $6,000 a year. And then we got him the Third Nail, and then you rewrote the policy, and he saved thousands and thousands of dollars.
Yeah, like cut it in more than half.
Yeah. So there's those programs out there. So, we've always tried to show you how to get the best deals, no matter what the market is. And when the market was bad, when the insurance got really, really bad a couple of years ago, when it started getting really, really bad, we were the ones that were out there saying, hey, we were not the only ones, but we were also out there saying, hey, some of these insurance companies are starting to pull out. We haven't seen that in a long time. Ross, like, wow, we had more insurance companies pull out of the state of Florida than I've seen, since I've been doing this at one point.
It was the rate increases that I really noticed. It was, I saw them going up in December of 19. But then, it was just coincidental that it was COVID. It had nothing to do with COVID. But then in that spring of 2020 is when we started talking about it on the show, because I was just talking about how, man, things are so expensive, and nobody's doing anything, and and then a year and a half later, then the news started talking about it.
Right. And then what happened is everybody started waking up to the fact that the reason why our policies were higher wasn't necessarily the hurricanes and natural disasters that other states experience, in different ways, like wildfires or flooding or something like that. We have the hurricanes. and some wildfires once in a while. But the big problem for us was fraud, right? So we had a lot of people. The way our laws were written, it gave the homeowners a lot of leeway to be able to sue the insurance companies for free, basically. So the attorney for you would say, "Hey, Jim, come over and I'll sue your insurance company for you. And don't worry, you're not going to have to pay me a dime. I'm going to get all the money from the insurance company. Just let me handle it." And then they just go through heck with
Yeah.
the insurance company. Now,
I remember the radio commercials because obviously that's what I did for a living for all those years, and that was it. The opening line is, "I want to sue your insurance company." That was the opening line for a particular attorney. That's what they wanted to do. They'd go and they'd sell, and there was no repercussions. There was no skin in the game for the person to sue.
Right.
And
You
that's
mentioned, like,
what we changed.
fraud.
Mhm.
You know, go back 10, 15 years ago, and there was water damage fraud. That was whole assignment of benefits and all that. Now, you know, you got your home's kind of older than 20, 30 years. You're only going to get limited water damage now,
Right. No
you
matter
know,
what.
because of all that
The
fraud.
fraud that happened in the
from,
past.
hey, you know, my dishwasher had a leak, but, you know, now I need all new cabinets and I need all new floor in my entire, you know, bottom floor. And so that went crazy. So now, you know, now a policy only comes with 10 grand of water damage unless it's new, you know,
Yeah.
a lot of the times.
Right. And and the frauds, the statistics were something like crazy. It was like, even though we were only something like 20% of all the
We're
claims
80%
okay,
in the
love this.
United States of claims that result in a lawsuit.
And we're only something like
8%.
12%. Oh, 8%?
8 or 9% of actual claims filed.
Right. So we're 8% of the claims filed, but we're 80% where there's a lawsuit involved.
Of fraud.
Right.
Well, no, just a lawsuit involved.
Oh, all right.
Right.
80%,
Just like,
yeah.
And because our laws were more lax than other states about how you sue insurance companies. So even though I'm not a big insurance company fan, so Ross knows this, I really have not liked insurance companies for a very, very long time. Even in college, I actually got in a fight with my professor about insurance policies at one point. And but the thing is, there was a lot of abuse. So they corrected it. And then, just like you predicted, Ross, that you said, we think that the prices are going to start, premiums are going to start flattening out over time as these lawsuits go away. We're going to see it get a little better and better. We did see after those laws were passed, we did see insurance companies come back into the market. Not, I think as many as left, if I'm not mistaken, or close to it. No?
Those companies are not back in. So we've had new insurance companies become approved and say, hey, we're going to get into the Florida market, but right now they're just kind of, most of those companies are just participating in the Citizens Takeout program. So it's not like you can go get a new quote from.
Oh, okay. So they're just picking and choosing the one they want from Citizens.
Right.
Okay. But that still helps.
Yeah.
They're still coming back in the market and taking some of that burden off of Citizens. So that's another good thing that's happening. So, a year and a half after those laws passed, those regulations passed, Ross started seeing some relief in the huge price increases we were getting. It was really kind of crazy there too, Ross, right? There were times where you were seeing 20, 30% premium increases from one year to the next
That was
year.
low. I mean,
really?
We saw
20
80,
was low, yeah.
you know, I would say probably the average was probably 40.
Wow, 40%.
Yeah.
Yeah.
But yeah, we saw 80. We saw policies double, you know, on maybe an older home with an older roof during that time. You know, it was crazy. You know, I always say it was like, you know, every day we'd walk into work and it was just like being kicked in the stomach, you know, because everybody's yelling at you. And
Sure, man.
we're doing our best to find you something better, man.
One of the things I would like to see, I wish there was a category when you go in and you fully renovate a house. Let's say you go and
I got it. Yeah.
Really?
You fully renovate. You 100% rewire it. 100% replumb it. 100, you know, brand new AC system, all new windows, all new roof. I can get you that 25 year bill.
Oh, you can.
Yeah.
So if you do a full rehab on the house, you can get almost like a new construction
Absolutely.
insurance, even though it might be a 1955 house. If it's CBS, And it doesn't have a weird roof. Even frame?
Yeah.
Really?
As long as 100% rewired, 100% replumbed, brand new AC system, all new windows, all new roof.
Very interesting. I'm glad to hear that because I always thought that you couldn't get that, and I'm like, wow, that's a bummer because like when somebody fully renovates it, they should give a discount for that because it creates an incentive for people to do the full renovation instead of having this house that almost uninsurable. Nobody wants to touch it. You know, it kind of gives incentive. Hey, renovate the house, and we'll give you a much more reasonable insurance policy. It'll be protected for a long time.
Yeah, I mean, with that being said, it's like one company that does that, but
only one company.
But they're still super. It's very competitive because it becomes a 2025
home.
Home.
Right.
And that particular company is competitive in brand new construction anyway. So
right.
If you fully renovated your house, all that, call me.
So
does that happen often? People do that a lot.
What, renovate completely?
I mean, completely.
Well,
like you're saying. I mean, because the biggest thing to me is the plumbing aspects, and so much of the plumbing is run in a slab underneath. The house.
So I mean, the slab part of it, that's not a big that plumbing it's more everything, all the plumbing inside the house.
Okay,
right? Because the waistlines, that's not a big deal. It's more they're more concerned about the plumbing that's in the walls. They want that to be brand spanking new, and it's not going to pop. It hasn't been sitting there corroding since 1955. It's a 2025 pipe.
Okay, all right.
So
everything above ground then.
Above
okay,
ground,
all right.
Yeah, you don't have to dig
good to know. I didn't.
That part of
okay,
it. Just the above ground.
That's
stuff.
a good point, though.
Good to know.
I had that happen. It was happening once. I was flipping a house. It was completely done. It was our very first home, right? I worked so hard in this house. It was a year. I was working another job. I was doing this part-time. Every minute that I wasn't working the other job, I was working this job. And we were ready to put the house on the market, and we were getting ready for the open house. And my wife calls me at the time, and she says, Jim, we got a big problem. They got a jackhammer out. The plumber's got a jackhammer out. We had just brand new everything else, right? I go, what do you mean they got a jackhammer out? She goes, there's a leak in the supply line somewhere, and they think it's in the floor. Now, we just retiled the whole house. And the way that they found the supply line, it was going through walls and underneath the kitchen cabinets. So they were planning on jackhammering this thing, pulling out all our cabinets and countertops.
My biggest fears.
And I was like, don't do anything. I was down in Fort Lauderdale. I'm like, I'll drive back up to Delray, tell them not to do anything. So I go there and I go, show me where the leak is. And it was in this closet. And I go, pull off that baseboard board and cut out because the drywall was wet. But the floor, you could see that the floor, there was some type of leak because the grout lines were dark, right? The grout lines were dark because it was filled with water. So I go, pull off that baseboard. Now, the guy's got the jackhammer out, right? Like he's ready to start cracking up the floors. He wrote, he kind of mapped out where he was going to channel through the floor in order to do this. I go, pull off that baseboard, cut off the drywall, give me a 2 foot by 2 foot. And as soon as he pulled the baseboard off, it started gushing like a craziness. One of the finish nails from the baseboard hit the supply line. And the guy thought the leak was underneath the ground. So he was ready to start cracking up my floor, right? And all he had to do is pull the baseboard off, and we found where the leak was. It was like $125 repair, right? So I every time I hear about I didn't know the supply lines were in the floor though, and I'm like, why are you cracking up the floor? And he goes, well, that's where part of the supply lines are, right? But anyway, we didn't have to do it. Every time I think of supply lines in the floor, I think of that story about they were ready to crack up the thing. It was my very first flip. We didn't have to do it, so I'm very, very happy. But in today's market, though, Ross, like right now, what's happening right now when people are coming in, let's talk houses first and other types of insurance. Are you still seeing people come in with like the total deer in the headlights, sticker shock, can't believe this is happening, hands on their heads? Or are they actually getting some relief now from the way it was 3 years ago?
I mean, yeah, it's definitely better than it was 3 years ago. I mean, obviously, rates are still high, right? Because we went through a significant period of rate increases, but we're starting to see that soften. We're not seeing rate increases so much. Things are staying kind of flat.
Mhm.
Or if we are seeing an increase, it's it's probably in the 10 to 15% range as opposed to 40. We're seeing rates, some of the renewals come down a little bit.
Mhm.
Something I quoted last month, I quoted for an effective date of next month. That rate's a little bit cheaper. So as we're kind of moving, and a lot of people think, oh man, when we get to hurricane season, you can't get insurance, and they jack it up. It's always more expensive during hurricane season, and that's not the case. But normally, especially over the last 5 years, as we kind of progress through the year, rates kind of we're going up. Just from 2020, we're just keep going up and up and up. So. It would be, if I quoted this in the beginning of the year and then quoted at the end of the year would be higher, but it wasn't like, because we're going through hurricane season. But now I'm seeing, as we're going through the year, I'm seeing rates start to come down a little bit. So that's good news.
We're not at the point, though, where we're saying, hey, if you want to try to save a significant amount of money on your mortgage payment, go ahead and check your mortgage.
I would always
insurance.
check it. I would always check it. It's worth it. It doesn't cost you anything.
Okay.
To go, hey, no, it doesn't cost you anything to say, hey, I've got the best rate, or hey, I can save $500.
Okay, so you heard it. Ross says, give them your business. Call them up, ask them, through us. Just call 888-973-7828 or go to floridatalkrealestate.com and say, hey, I want an insurance quote. All you have to do is give us your address. Ross is one of the most simple ways to get help from our team. Because like with me, you got to talk to me a lot, figure out what's going on, sell a house, buy a house, invest a house, whatever, right? With Mike, he's got to figure out all your financing, whether you want to refi or buy a house or down payment assistance. With Ross, it's so simple. Hey, Jim, I'd like to know the insurance quote for 123 Main Street. Right?
Yeah.
And then I go, okay, thank you. Then I send that information to Ross. Ross usually same day, no later the next day, gives you back a bunch of quotes to see if it's worthwhile for you to change up or not. And if you don't see a better opportunity, then don't take it. But at least you're getting the best deal out there.
And I'm not going to bug you.
And Ross is the least hyper out of all of our groups. I know I'm number one.
Here you go.
Yeah.
That's the way Ross is. Here you go. This is what we were able to find. Here's our premium type of policy. Here's your low ball policy. And he even goes that far for you. And then there you go. That's it. Boom. The phone doesn't start ringing. The emails don't start coming.
Like, hey, did you get that quote I sent you? What'd you think? You don't get an email 5 days later like, hey, just following up. You won't hear from me again unless you want my help.
There's a question, you might have.
I will call you back if you have questions, but if you don't reach back out to me, I'm not going to bug you.
Right.
Yeah, you're not going to get that. You're just going to get real information and real help in real time, and then you decide how you're going to use that information. That it's that simple. So if you're trying to save some money, we have no problem trying to check it out and see if we can save money that way for you. So please give us a call. We'd love to help you and get you the answers that you need.
Yeah, we're never trying to sell you anything. We're just trying to give you enough information for you to make an informed decision.
Exactly. Right. Exactly. Because none of us want you to try to do something that isn't in your best interest on any level. So we just try to get you the answers for you and go forward that way.
Like we tell people, no. We don't want the policy that we can get you versus what you have isn't as good. Keep what you have, dude. I don't want to write you a new policy.
Yeah, exactly. We're going to continue talking about this after the break. We're going to talk about auto insurance and see if auto insurance is having any similar changes, positive changes for the consumer. We're going to talk a little bit about that. And then we're going to talk about something interesting that kind of popped up recently to me. I don't want to go into great detail on that particular situation, but I want to talk about something that we've talked about in the past that people don't know about, which is a lot of people don't know about, which is what happens when you're selling a house or buying a house and there had been previous insurance claims on it in the past. Will that affect you as the new homeowner or affect you as the seller selling it to somebody else after a claim had been filed on the house? You might be surprised at some of these answers. So we're going to get back to that in 2 minutes and 2 seconds.
2 minutes and 2 seconds, a little bit more than that.
Yeah, I know.
FloridaTalkRealEstate.com. Write it down, floridatalkrealestate.com or 888-973-7828. It's a great way to get a hold of the team. Homeowners insurance, mortgage. We got attorneys that can help you out. And of course, Jim wants to buy, sell your home. If you're stuck with a home that's upside down, he can help you out with that too. 888-973-7828. We're going to have more homeowners insurance talk on the other side of this break, and we'll do that right here on Real Radio.
The visual aid you need for all the freaky stuff we talk about on the radio. Find it at realradio921.com. Here's the latest with weather on Real Radio.
I'm CBS 12 meteorologist Charlotte Carl. We're expecting those temperatures to continue to rise. A few passing clouds, but lots of blue sky will allow our temperatures to climb into the lower and mid-80s. That strong onshore breeze will remain in the forecast, leading to a high rip current risk and a small craft advisory. Just be extra careful there out on the waters today.
This report is sponsored by Mothers Against Drunk Driving.
For victims of drunk and drug driving, our grief is unique, but you are not alone. You always have a place at MAD. Call our 24-hour victim helpline at 877-MAD-HELP or visit mad.org.
Hey, it's your boy Johnny C here, host of Florida Talk Real Estate. They're tops when it comes to helping people buy and sell houses. But Florida Talk Real Estate is so much more than that. For 5 years, I've watched these guys help thousands of our listeners with any real estate need. They couldn't do it without their sponsors, who are experts in their fields. Check it out. Jim DePola, powered by Keller Williams Realty. Their team specializes in helping people sell their house for top dollar, and buyers get great deals on the purchase of their home. That's what they did for me and my family, and I couldn't be happier that I hired them for my real estate transaction. Mike Rao from the mortgage firm is one of our favorite guests on the show, and he is the mortgage guy. Whether you're looking for a refi or a mortgage to purchase a new home, Mike Rao will get you the answers you need. The mortgage firm is licensed to do loans in Florida, Alabama, Tennessee, and Georgia, and they have local offices that cover all of South Florida. So if you're thinking about a refi or a new mortgage, go to the mortgage guy, Mike Rao, and find out what he can do for you. The Mortgage Firm, Inc., NMLS 189233, Florida license MLD 78, equal housing lender. The law office of Paul A. Krasker has been specializing in real estate law for nearly 25 years and has the professional team you need. Upside down with your house, Paul's team can help you conduct short sales, loan modifications, even if you're behind on payments. They also help you with foreclosure defense and bankruptcy. They can even help you get a student loan modification and repair your credit to get the score you need. Paul's full-service team has helped thousands of our listeners, and they can help you too. Trident Title LLC is the largest privately owned title company in Florida. When you need a title company to complete a refi, home purchase, or sale, Trident Title has got you covered. Not only do they offer competitive pricing, Trident Title has attorneys on staff to make sure if you have bumps in the road declaring title that you can get the job done. Beware, not all title companies in Florida have attorneys on staff. Trident Title does and complies with all the new federal regulations released last year. Ross Komarinetz, owner of Brightway Insurance, has been helping our listeners get great rates on homeowners insurance plans. Haven't checked your homeowners insurance policy in a while? This is a great way to help reduce your monthly mortgage payment. Ross can also help with renters and auto insurance. Ross is only a phone call away and can usually get the answers you need same day.
Call Ross today at 561-425-6228 or drop by his office at 873 Donald Ross Road in Juno Beach.
So now you know why I'm happy to be part of the Florida Talk Real Estate Show, the longest running real estate show in Florida. And all these sponsors are just a phone call or a click away. Just call 888-973-7828. That's 888-973-7828. Or go to floridatalkrealestate.com. That's floridatalkrealestate.com. And don't forget to use the most accurate search engine to find your new home or ask for a free home valuation because floridatalkrealestate.com has you covered. That's floridatalkrealestate.com.
Anajar and Levine Accident Attorney Studios.
Have you been in an accident? Call Anajar and Levine Accident Attorneys at 1-800-747-FREE.
That's 1-800-747-3733.
Real Radio 92.1 is WZZR West Palm Beach, an iHeartRadio station.
Make us the #1 preset on your car radio and on the free new and improved iHeartRadio app. Listen for all your music, radio, and podcasts. Free never sounded so good. This is Florida Talk Real Estate with Jim DePola and Johnny C. Got a question for the show? Call us live at 1-877-927-6969.
Hey, happy South Florida, everybody. It's Jim DePola, also known as Jimmy D, my alter ego, when Johnny C is not here, who is not here today. Johnny C, get well soon, and happy Easter to you and your family, and happy Easter to Joyce, Johnny's mom. She stopped by the show, even though Johnny didn't, and stopped by the show and just said, Happy Easter. So happy Easter, Joyce. I'm so glad you stopped by to say hello. And everybody, happy Easter out there. And I guess past due, happy Passover. Was it Passover? I think it was Passover was just a couple of days ago.
Right.
Yeah,
Yesterday?
usually
Day
around
before.
It
the
was
same time,
Passover, right? I got the right holiday.
I think so.
I think
it's
so.
same time as Easter.
Yeah. So anyway, happy holidays to everybody is what I'm trying to say. So we were just talking about how insurance policies, home insurance policies, have been basically flattening out, and actually some people are actually seeing decreases, which has been out of the norm over the last several years. But it's all because of rules and regulations that were changed about 2 years ago, and maybe even 3 years ago. Maybe it was 2022.
December of 2022.
Yeah. Well, that's almost 2023.
Yeah.
So because of these new regulations, we're starting to see home insurance flatten out, which is a much needed relief here in Florida. And what's going on with like auto insurance and everything, Ross? Because we were seeing that auto insurance was getting super expensive in Florida too. Like we're one of the top states for premium prices.
Yeah. I mean, because they went through the similar kind of situations as the homeowners.
I was going to say, was it fraud based as well?
I mean, I wouldn't say excessive litigation, right? And we saw a lot of the companies that only wanted, people with higher limits, like very high limits. Those companies that, thought they were getting a better, clientele, I wouldn't say clientele, but a better underwriting situation, because people with higher limits, whatever.
There's supposedly less risk financially and everything.
Right. But what happens is, as soon as an attorney sees that the other party has those higher limits, then they want to get all of that.
Yeah.
And so we saw a lot of those companies that only exclusively wanted those type of drivers
are now pushing them away.
I mean, over the last 3 years, I mean, it's come back since, but probably about maybe a year, six months to a year now. But we saw all those companies say, hey, we're not even writing any new business anymore. Like they stopped even offering coverage because they were getting killed on their higher limits so bad.
That's funny. So the insurance companies put out advertising. If you've got bad credit, if you've got a shaky job, right? If you're not sure what you could do, we got a really low policy for you, and we want you right now.
Yeah, because they only want that smaller limit.
Yeah, that's sounding pretty crazy.
But yeah, we're starting to see they went through the same thing where they were just getting hit with litigation and a small little rear end fender bender. They're suing for $250,000. So they kind of went through the same thing. But with those changes that were made on how you can, the insurance companies pay the attorneys and things like that, they've started to see their rates come. They're experiencing better underwriting losses, so they've started to lower their rates, and we're seeing kind of the rates across the board with homeowner or auto insurance come down. But we're not seeing like a huge difference in their premiums, right? Like if you're paying $100 a month with whoever you have, and we shop it, maybe it's 99 or 101.
Right.
They're all
It's
kind of
right
in
there.
the same area.
But it's not 120.
Right. Yeah,
right. It's not 120.
And you
after
may have
do
seen your
100.
renewal come from 110 to 100.
Right.
We're starting to see those rates come down. So it's, right now in the insurance environment, even though we are higher than we were 5 years ago as far as rates go, because everybody remembers, hey man, we had low rates 5 years ago. It's not as bad as it It was. Everything's getting better. We're not seeing huge rate increases. Rate increases are coming down. Everything's getting better.
So, now part of it, I do have, if you don't
please,
do you mind,
no, please.
Jim, a question with that too, or one of the thoughts that I had, and you have mentioned something similar to this, is the fact that cars are a lot more expensive now. Body shop parts, more expensive. Labor costs for repairs, more expensive. This all kind of adds into it, or no?
Yeah, it does. And I mean, on the flip side of that, right? Yeah, all that's become more expensive, and that's one of the reasons that things have gone up. That's definitely one of the reasons, but that's the property damage part of it, right? Your comp and collision.
Mm-hmm.
That's the comp and collision part of your premium. But what was really affecting it was the limits.
Like the personal
injury.
Right. Like your liability limits, because that's what the attorneys are going after, is your liability limits. Right. So if you hurt somebody or cause property damage, and
that makes it kind of makes sense. The car parts and fixing the car, that's kind of like it can only go so high.
Right.
But the liability for getting in a crash, that could be astronomical if an attorney makes the case the right way.
Yeah.
Right. But if you have a $50,000 car and it gets wrecked, it's not worth $80,000.
Right. Well,
You know what I mean?
So check this out.
I've
seen two scenarios within the past year. One, they paid like 10 grand for, a 2017 car. It got, got into an accident, wasn't their fault. The insurance company totaled it out, gave them 15 grand. So they
made 5 grand. Yeah.
I got,
I guess that scenario is possible.
Where they totaled the car.
Right.
Gave him, it might have been around the same $16,000, and gave him the car back, and the car was completely fine, and like he's able to put it, like he's a car dude, so he wanted the car. He was able to put it back together just completely fine.
Yeah.
But I mean, just gave him 17 grand, and it was like a 2009 car.
Wow, that's pretty wild. So if you're looking for auto insurance quotes to see if you can get a cheaper deal or something, Ross is your guy too. And Ross, what other types I never really talked to you about this, but what other insurance does Brightway Insurance Juno Beach do besides auto and car?
I mean, we do everything but health insurance. So auto, home, boat, life insurance, jewelry, personal articles, business. You got a business. I guess if it's
so anything but health.
Everything but health.
Okay, so think of Ross when you're thinking
pet
of that.
Insurance. We do pet insurance.
Yeah. That's pretty cool. So I wanted to talk to you now. I want to switch gears on this and ask you a question about previous claims on a house when you're in the process of selling it, from a buyer's perspective and a seller's perspective, and the house had previous insurance claims on it at some point. And let's say sometimes those insurance claims weren't even done by the current owner, that there was an insurance claim that happened before the owner even owned it. Can that actually affect the insurance policy when you're trying to sell the house to create the new policy for the new buyer?
It could. There's some carriers out there that look back. Seen one company go back 6 years. But they look back at, normally at least 5 years is going to be kind of the average. They look back at, hey, has the house had any claims? And has the person that's, the named insured, the person that's buying the house, the owner, has that person or the new person had any claims when they're factoring in the rates?
Oh, whoa. So you're telling me that the buyer, if they had claims on a previous property they owned and they're buying the new property, that will be considered for the insurance for the new property?
So the claim,
a
claim follow, just like just like an auto insurance claim, the claim will follow the
person
for 5 years, even if it's in another state.
Wow.
Yeah.
Did you know that? Jimmy?
No idea.
That's why I talk about it all the time. Even if $0 were paid out, right? $0 were paid out. But it was, you filed the claim for water damage. That's going to show up. That's going to follow you for 5 years. That's why I always tell everybody, hey, don't before you call. If you're my client, or even if you're not, before you call the insurance company to file the claim,
Talk
call,
to your agent.
Yeah, call me, call
or
your
call
agent.
Ross.
Yeah, I mean, I'll help you too, but you want to do that first, because as soon as you pick up the phone and call your insurance company and say, hey, this is policy number, blah, blah, blah. I got water coming out of my sink. And then you tighten the screw and you go, hey, don't worry about it. It's fixed. Don't worry about it. And you hang up the phone.
Claim. Wow. Yeah, I did know
And you
about
didn't even
that part. Yeah, I knew about that part. Even so, you never just want to call up. You don't ever want to panic and just call up your insurance company directly and say, I got a problem. You call your agent first. And let me tell you, after this week, I learned that not that I didn't already know this, but not all insurance agents are the same. I'm going to leave it at that. Call Ross. Just call Ross. Believe me, after what I went through this week, just call Ross. Okay, he'll help you. He'll give you the right information you need. He's always going to have your back. For real. And I know that sounds like a little commercial, but it isn't. It isn't. It's real.
And there are a lot of people out there to listen to us each week, and they've heard a lot of this, but there are new listeners out there each week as well. So, Ross, what area of Florida in this, because we're southeast, right? What do you cover? Do you cover from Miami to
Florida?
I don't know. Anywhere in Florida.
And Georgia.
And Georgia.
I didn't know that.
We're licensed in Georgia.
I didn't know that.
Excellent.
Yeah.
I wish you told me that, because when we have Georgia customers,
it's fairly recent.
Oh, okay,
it's fairly,
cool.
like probably within the last 6 months.
Awesome. Well, congrats on that. That's cool.
I got a guy that my auto guy is. He's from Georgia, and he's awesome. He's awesome. And so he's got a lot of connections still in. I mean, he grew up in Georgia, but he's been here for forever. But he still has a lot of connections up there. And
good.
Yeah.
Can I say his first name? Is that all right?
Yeah,
Aaron. It's Aaron, right?
Yeah, it's Aaron.
Yeah.
How did you know that?
Well, I've dealt with Aaron. I asked Aaron to shop, my auto insurance.
Right.
As a matter of fact, he did. He hooked up myself and my wife, Carlo. We combined our policies together, so we got a great discount through Aaron and Brightway Insurance, Juno Beach. But I also did the same with my mom, because her insurance being, she's elderly. So obviously it's way up, and it's because of that. I'm assuming it's because of that. So we tried to shop hers as well. Unfortunately, Aaron couldn't do anything with it. His quote was higher than what they already have. So there's a perfect example of where sometimes it just doesn't work out, but it is okay to ask,
but now you have enough information to make an informed decision.
Yeah,
exactly. Now,
but Aaron's a great guy. I've talked to him several times on the phone. I mean, you want to talk about a friendly, what a great outgoing personality.
Is it Aaron or Aaron?
It's Aaron.
Aaron. Okay.
Aaron,
Just
but
sure.
you can call it his name. He goes by G.
G.
His last name is G-E-E.
So
it's just easy to say G.
G.
Hey, G.
Hey, G.
Oh, okay.
Okay, cool.
But Aaron, yeah.
So
Aaron.
awesome, man.
Well, that's my Jersey accent too.
So one of the things that is surprising is, like, I didn't know that if you file a claim on another house and then you're buying a new home, that could be a strike against you in getting the insurance claim on the current house. Another tip that, and this isn't related to the subject we're talking to, but I want to bring this up. Another tip is your credit score affects your insurance premiums. So the better credit score you have, the better insurance premium you're going to get. People forget about that. I didn't know about it until Ross told us several years ago.
It's loosely based on credit, but yeah.
But it can affect it.
Yes.
Right?
It can.
So having a better credit score will get you better premium. So that's another reason why to boost your credit score. But getting back to having the claims, let's say that there were past claims on the house itself, and let's say that the homeowner didn't even know that, like, it was done one or two homeowners before them, and it's within, let's say, that 5 or 6 year period. How could it affect the sale? Like, how is it going to affect the insurance policy, I guess, for that particular house?
I mean, it may make it ineligible with, some carriers, but you can get insurance, you can, there are carriers that don't care, about the previous owner's claims. But maybe the most competitive ones do. So that could affect the premium or the policy for that particular carrier. And okay, maybe it's not eligible. And now we have a higher premium because of that, because we have to go to a different carrier. But at the end of the day, you can still get insurance. Now, what happens if there's an open claim? because some people may have an open claim and they're still trying to sell their house. Maybe they've done all the repair. Like this happened to one of my clients. He was selling his house and he had claims from like past hurricanes, but he fixed it. He fixed it. He's fortunate enough to be able to fix it all. But he didn't like the amount of money that, versus what he spent versus what they wanted to give him. So he was suing the insurance company. And so the claim was still showing open, but he was trying to sell his house.
Right.
And so couldn't even though all the repairs had been made, nobody would insure it because of the actual open claim.
Wow.
So we had to get the company to close the claim. He had to get with his attorney because he was suing him. He had to get with his attorney, contact their attorneys, say, hey, let's just close this and get this done. And then finally able to get the claim closed, provide proof that the claim's closed. And then he was able to sell his house and, move forward with the transaction.
Right.
Because the other party couldn't get insurance. Or, I mean, we could have gotten them insurance, but I think they were trying to get out of the deal maybe at the last minute too and things like that. So, but he ended up selling his house and moving forward with it. But yeah, it affected him.
You don't even. I am going to start.
Can I real quick?
Sure.
If you have a hurricane claim or an act of God claim, that's not going to affect you. That's separate. That's different.
Oh, it'd be like a water claim, fire claim, theft claim, something
theft,
like that.
Things like that. If you have a hurricane claim, that there is no, the carriers don't. That's not a ding.
Okay.
Right? That's not a ding because that's an act of God. So when we're talking about these prior claims, the wind claims are not going to be like a water damage claim.
So it's really important if you are selling your house to talk to your real estate agent about whether or not you had a claim in the past that you know of, just to be proactive to find out what could happen. So you're not surprised like that poor guy that went to sell his house, fixed his house, had the claim open, and then he couldn't sell the house, right? So it's really important that you talk to your agent about that so they can figure out what you need to explore to figure out to make sure what your options are. And the other thing that's really important is if you're a buyer, you should probably ask the owner if they have ever filed a claim. Buyer's agent should probably ask that. Now, it is in the seller disclosure. In Florida, you don't have to sign a seller disclosure as part of the sale of the house, but we always recommend that sellers do that to protect themselves, because the number one reason for a residential lawsuit in the United States for a residential sale, the lawsuit is based on non-disclosure of something in the house that should have been disclosed. So I always use the longer, I think it's a 4-page or 5-page form of a seller disclosure where they really ask you a bunch of different questions. And then there's what I call the lazy seller disclosure form that's like 1 page long and it asks you certain questions. But I always try to use the bigger one because it's better to disclose more than less. And usually if somebody has a question, when they sit there at the table and they're filling out the disclosure form, and they say, I had a toilet valve stem leak and I had to replace the baseboard and some drywall, and it happened 4 years ago. Should I put that in there or not? And first thing I ask is, what, did you file a claim? And if they say, no, I didn't file a claim, I just fixed it. My thing is, I always use what Paul Krasker from the law office, Paul Krasker, tells you. If you're asking whether you should do it or not when it comes to disclosure, just disclose it. Because if you're asking, that means you probably don't want to tell somebody because you think it might affect the value of your property. And if the buyers find out about it later, right, and they're like, you should have told me that. I wish, that's important information for me to know. So if you're wondering if you should disclose something or not disclose it, then you should just disclose it. That's my advice to stay out of trouble. My favorite disclosure one was a house on Palm Way in Lake Worth, right? Really great neighborhood in downtown Lake Worth. They had a really old house. The sellers were kind of wacky. So I was the listing agent. So I decided I was going to go to the inspection for the house. Even though I was the listing agent, usually the buyer's agent is the only one that goes to the inspection. But I was there and I was waiting for the inspectors to show up. And then Hewlett Environmental pulls up. One of the guys from Hewlett pulls up. And he's talking on the phone. And he's talking pretty loud. And he's talking to his buddy. He goes, well, I got to go now because I'm just about to start a job. And he goes, oh, not this house again. And I'm like, what? So after he hung up, I walked over and I go, hey, I'm the listing agent. I kind of overheard your conversation. What did you mean by not this house again? And this is what he said to me. I couldn't believe it. Oh, this house is filled with Formosa termites. And by the way, Formosa termites are the kind that eat your concrete. So you're right. And he's like, this house is filled with Formosa termites. Let me show you. And he was so excited about it. And he was like, let me show you. And he acted like he already owned the place. Not that he's been there so many times. He knew every crevice. And he goes, and he starts walking the house. There's Formosa termites here, and there's Formosa termites here, and there's Formosa termites here. And he's pointing all over the place. And I'm like, oh my God. Now, in the seller disclosure, the seller said they had no evidence of termites, right? And never had a treat for termites or anything else. They put in no on the termites. Now, if that buyer bought the house, and let's say they brought in ULIT after the house was bought, and ULIT goes, oh yeah, we've been here many, many times, and you got problems here, and you got problems here. That buyer could sue the seller for not disclosing things that are not readily observable that could materially affect the value of the home. And that's the language. Sellers are supposed to disclose things that are not readily observable that could materially affect the value of the home. So just be careful on that. That's the number one reason for lawsuits. And don't be like that one family. Now, they didn't get in trouble because the termites were found out, and then we had to negotiate fixing the termites, but we got it done. But the claims thing, is there any other advice for claims, previous claims, Ross, besides just asking people, hey, did you ever have a claim on the property that you know about? Is there anything else to ask about that?
I mean, if somebody does say they, had a claim, or, maybe just find out get the details. That way, if somebody needs to know the information, you have all those details already. Like, hey, what happened? Okay, how much did roughly how much did you get? What'd you do to repair it?
Mm-hmm. Okay, excellent. So that's really important. If you guys have any insurance questions to save money, questions about policies, anything like that, give us a call right now. We got Ross here live on the show. This is live today. We're almost always live. And give us a call, 877-927-6969. I almost forgot. Forgot there. 877-927-6969. If you want to have some fun, call 888.
973-7828.
No,
or the other one.
I always think of the rocket scientist that got mad at me about that. So anyway, if you have any insurance questions, please give us a call. And if you have any kind of questions about real estate right now, please give us a call. We'd love to take your questions on the air. On the flip side, we're going to take a little break. And on the flip side, we're going to be talking about mortgage rates and where we are right now in the mortgage rates. Last week, we had a very wow, it was so crazy. Last week was a very topsy-turvy mortgage rate thing. We were bouncing around all over the place. Nobody knew what was happening. It was kind of crazy. Now it's kind of calmed down, and the smoke is kind of cleared for at least a little while. So we're going to talk about where we are, what happened last week, where we are now, what's probably going to happen in the future. But more importantly, and I think this will be fun, we're going to talk about mortgage rates historically from the 1970s per decade, from the 1970s until now.
Right. Interesting.
And there was some really interesting historical stuff in this article I read about that.
Well, stay tuned for that. That'll be on the other side of this short, quick break here on Real Radio.
We're everywhere you need to be. Find your favorite show at realradio921.com.
Hey, it's your boy Johnny C here, host of Florida Talk Real Estate. They're tops when it comes to helping people buy and sell houses. But Florida Talk Real Estate is so much more than that. For 5 years, I've watched these guys help thousands of our listeners with any real estate need. They couldn't do it without their sponsors, who are experts in their fields. Check it out. Jim DePola, powered by Keller Williams Realty. Their team specializes in helping people sell their house for top dollar, and buyers get great deals on the purchase of their home. That's what they did for me and my family, and I couldn't be happier that I hired them for my real estate transaction. Mike Rao from the mortgage firm is one of our favorite guests on the show, and he is the mortgage guy. Whether you're looking for a refi or a mortgage to purchase a new home, Mike Rao will get you the answers you need. The mortgage firm is licensed to do loans in Florida, Alabama, Tennessee, and Georgia, and they have local offices that cover all of South Florida. So if you're thinking about a refi or a new mortgage, go to the mortgage guy, Mike Rao, and find out what he can do for you. The Mortgage Firm, Inc., NMLS 189233, Florida license MLD 78, equal housing lender. The law office of Paul A. Krasker has been specializing in real estate law for nearly 25 years and has the professional team you need. Upside down with your house, Paul's team can help you conduct short sales, loan modifications, even if you're behind on payments. They also help you with foreclosure defense and bankruptcy. They can even help you get a student loan modification and repair your credit to get the score you need. Paul's full-service team has helped thousands of our listeners, and they can help you too. Trident Title LLC is the largest privately owned title company in Florida. When you need a title company to complete a refi, home purchase, or sale, Trident Title has got you covered. Not only do they offer competitive pricing, Trident Title has attorneys on staff to make sure if you have bumps in the road declaring title that you can get the job done. Beware, not all title companies in Florida have attorneys on staff. Trident Title does and complies with all the new federal regulations released last year. Ross Komarinetz, owner of Brightway Insurance, has been helping our listeners get great rates on homeowners insurance plans. Haven't checked your homeowners insurance policy in a while? This is a great way to help reduce your monthly mortgage payment. Ross can also help with renters and auto insurance. Ross is only a phone call away and can usually get the answers you need same day.
Call Ross today at 561-425-6228 or drop by his office at 873 Donald Ross Road in Juno Beach.
So now you know why I'm happy to be part of the Florida Talk Real Estate Show, the longest running real estate show in Florida. And all these sponsors are just a phone call or a click away. Just call 888-973-7828. That's 888-973-7828. Or go to floridatalkrealestate.com. That's floridatalkrealestate.com. And don't forget to use the most accurate search engine to find your new home or ask for a free home valuation because floridatalkrealestate.com has you covered. That's floridatalkrealestate.com.
You're listening to Real Radio 92.1, and we are an iHeart radio station. Florida Talk Real Estate with Jim DePola and Johnny C. Got a question for the show? Call us live at 1-877-927-6969.
I know, it's a crazy. Hey, this is Jim DePola. It is crazy. It's a crazy Saturday. Talking about my poker travails back in a long time with Ross. Happy South Florida, everybody. This is the Florida Talk Real Estate Show. We are the #1 information provider about all things real estate in South Florida and Florida in general for 13 years now. That's right. We started January 7th, 2012, and we're still going. I don't know. Are we still going strong? Okay, we're still
stronger,
going strong.
better than ever.
Stronger, doing
better.
A hormone replacement, man. We're juiced and ready to go.
Nice, yeah.
So
as you get older.
Exactly. So if you have any questions, we got about 30 minutes left for you to take your questions live on air. Everybody on Facebook and YouTube, thank you so much for checking us out today. And happy Easter to everybody for this weekend. I hope you have a really enjoyable Easter weekend. And let's get into a couple more things today. The mortgage rates. Oh my gosh. Last week was very, very pretty crazy roller coaster ride of interest rates. So what happened was at the beginning of the week, we were at roughly 6.5%, 6.6% for the Freddie Mac rate. And we've been at that rate now for pretty much like 18 months.
Okay.
There were a couple points where we went maybe a half point higher, and one short period of time we're a half point lower than 6.5. But overall, we've been staying at about 6.5 now for 18 months, and it's been a pretty stable market. And the interest rates have been pretty boring to talk about until last week. Last week, what happened is after they started talking about messing around with the tariffs even further, for the first time that I know about, and I've been on the earth for a while, is that for the first time when the stock market started going down, what normally people do around the world, including the United States, but world overall, will come back to the U.S. bonds and start buying bonds because they're a safe place to put your money when the market's crashing, and you're not going to get really dramatic increases in your placing of putting things in your bond, but at least you're protecting it from going down lower while you're waiting for the market to get stronger. And that's where everybody comes to go, is to the bond market in the United States, because we're the safe, secure money, stable money market. Well, that didn't happen last week. What happened last week is when the stock market started going down, people did not race to the U.S. Treasury bonds. They went to other bonds in other countries. I read, this isn't perfect reporting, but I read that they were going to Japan bonds, Japanese bonds, and German bonds, and they weren't buying U.S. bonds as much. Because of that, the interest rates started spiking very fast. We went up like a half a point in 12 hours or something. It was crazy. So then we got into the sevens in the interest rate, and it looked like it wasn't necessarily going to stop. It looked like it was going to continue to go up. And by Thursday of last week, things started calming down again. And then the rates, the daily mortgage rate went down to about 6.6 again. And we've been pretty stable Thursday, Friday of last week. I'm sorry, I've got this wrong. Thursday, Friday of last week, the week before last, and then Monday, Tuesday this week, it kind of stayed within the 6.5%. Now, Freddie Mac, that isn't what Freddie Mac is showing. What Freddie Mac, which is our weekly report now we've been using for over 12 years, the 30-year Freddie Mac rate, that did go up, and it went up pretty dramatically. When I pulled it up last night, I was pretty surprised. So the week before last, we were at 6.62, and we jumped up to 6.83. So we had almost a quarter point increase in 1 week. But I think that this Freddie Mac report is a little behind the daily rates because the rates went up and down so much during the week. This is a weekly report, so it's only a snapshot of a moment in that week. So this is, I think, a little behind the time. And I think if Mike Rao from the mortgage firm was here, he'd say, yeah, that isn't really reflecting what's happening now. It's what reflected of all the craziness that happened when it was going up and down, up and down. So right now, the interest rates on Freddie Mac are a little higher than where we've been, but it's not even close to our highest in the last couple of years. The highest we've had for Freddie Mac. Well, last year we only got to 7.22. That was the high for the year. It was 7.22 in May.
Right.
Okay. The low for the year was September, and it was 6.08. And I'm not even looking at the chart. And I'm telling you this is because I have it memorized. But in 2023 in November, that was the high rate for like 9 years, and that was 7.79. So we're still way below. We're almost a point lower than that November 2023, but we're still a little higher than where we have been for the last 10 weeks or so. So interest rates are kind of bouncing around all over. This is why I was telling buyers it's really important to get, and Mike is saying this too, to get your financing lined up now. Because if we're going through this topsy-turvy market, and we did go through this in 2022 and 2023, where the interest rates were going up a half a point, down a half a point, up a quarter point, down 3/4 of a point, like all over the place. And if you're not locked in and ready to go with your housing purchase by having you qualified through the mortgage company so that when you find their house, you're ready to go in, if the interest rates are climbing up as you're trying to get your loan, that can create a problem for you. So please get prepared, get your numbers, know your numbers, get prepared, and get ready. Even if you're not ready to pull the trigger right this second, if you know that it's happening in the next 6 months or so, you got to give us a call now. Let us get you set up to get ready, to get ready, to get ready. And then when you're ready, then we'll be ready to pull the trigger, and you're not going to have to go through a lot of stuff.
I know there's no reason to be walking around thinking about how much house you can buy.
I'm in the process. I'm going to be probably buying a house later this year. That's what my plan is. I've been slumming around on the beach for a little while, but as a renter. So I'm going to be buying this year, but I've already talked to Mike Rao from the mortgage firm to find out, based on the type of house I want to buy, how much income I need to report to make sure that I could afford the house I could buy. I've also talked to my accountant, Jerry Perry, from the Perry CPA Group. He'll be on the show.
Wait, so the amount of income that you need to report to buy a house would differ if...
You're going to throw me under the bus here, Ron. So I am self-employed. I have a little flexibility. Let's just put it that way. But yeah, that
is a big deal. I mean, if you're self-employed, that's obviously much different than
very
if you have a
very
regular
different when
income.
you're self-employed.
Yeah.
So when you're self-employed, sometimes you're only using one tax return, sometimes you're using two tax returns, sometimes you're using no tax returns, and you got to figure all this stuff out. And look, I'm a pro, but I still have to go to Mike, and I still got to go to my accountant, Jared Perry, and find out what's going on and how to do this right. Because what the advice I give people on the air is, I'm not just giving you that advice because you should do it. I'm saying that everybody should do it this way because you get the best results. So why am I not going to do what I tell other people to do to get the best results? So when I'm telling you this stuff, when I say tell you, when I'm explaining how I do this stuff, or I explain how maybe you should do it, it isn't because I'm trying to be, overbearing. I'm trying to give you the best way to get the best results, because I've gone through over 1,000 transactions on the show now with my team, and over 1,000 transactions. Do you think you learned a little bit of stuff of how to work with buyers and sellers and what they go through? Right? Of course you do. So take that institutional knowledge and use it to your benefit, as opposed to learn as you go along. Why would you ever want to do that? So the interest rates are bouncing around. So I thought we would have some fun. There was an article. This is one of the best articles. I got so excited about this article. It's from, I thought I lost it, that I was going to be phoned out. It's, I don't even know. Oh, it's coming from Yahoo Finance, but it was a very good article. So I thought it was important to talk about it. What they did was they said, okay, the interest rates have been bouncing around all crazy last week, but where do we stand historically in interest rates over the decades since Freddie Mac started tracking interest rates back in 1971? And you know why? Remember, I've always said that the Freddie Mac chart is always 1971. I never knew why until reading this article.
All right.
Freddie Mac wasn't created until 1970. And then in April of 1971, that's when they started doing the weekly survey. So they were a brand new agency at that time. And I couldn't call them an agency, because Freddie Mac and Fannie Mae, they're not government agencies. They're they're overseen by government agencies, and they're a quasi-governmental, non-governmental entity. I think they're called
an NGO.
NGO, non-governmental organization. So they have some of the benefits of being part of the government, but they also have some of the benefits of being for-profit corporations that can make money. So Freddie Mac and Fannie Mae are not non-profit organizations. They're there to make money, okay? But they have special benefits given to them for the government to help oversee, to make sure that the economics of loans are running well. So that's why the report only started in 1971, the Freddie Mac report, because Freddie Mac only started in 1970. So that was kind of interesting. So I wanted to go through a historical trend of what was happening from the 1970s until today, and I thought it was kind of interesting. So in the 1970s, from 1970 to 1979, the lowest annual average mortgage rate was 7.38%. This is in 1970. 7.38%, 1970s, okay? The highest annual average mortgage rate, the high for the decade, was 11.2. And then the report says rates rose steadily from the mid 7% range to roughly 9% in the 1970s. buyers saw a significant jump to over 11% by the decade's end. The Great Inflation caused the incline. That's what they call it. I never heard of this before. I've heard of the Great Depression and all that, but they called the 1970s, where we got up to the 16% interest rates, they called it the Great Inflation. I thought that was kind of interesting. I never heard of that before. The Great Inflation caused the incline, a period marked by record high inflation. It spanned from the mid-1960s to the early 1980s and was triggered by the Fed's monetary expansion policies implemented during this period. We're going to get back to that because this is going to sound similar to what we're in today. Okay. Then the 1980s. What happened in the 1980s? The lowest interest rate in the 1970s was 7.38. The lowest in the 1980s was 10.19, almost 3% higher.
Holy
That
smokes.
was the lowest interest rate in the 1970s, 10.19. Highest annual average interest rate, 16.64%.
Well, keep your music. You can take your rates.
Yeah, exactly. Right. Yeah, the music was good back then.
The
too.
movies and the music.
Yeah, the movies and the music were
Keep your
good. Yeah,
rates.
you're right. I 100% agree with that. So it says the upward trend continued in the 1980s of interest rates inclining, and the average mortgage rate reached an all-time high of 16.64% in 1981. That's why I've always said that stagflation was Carter-Reagan. And everybody gets upset when I say Reagan because they're making it sound like I'm casting aspersions on that president.
Better not say
But
anything negative.
but
about
yeah,
Reagan.
sorry, Ross, I get you mad. But that's what was happening. It was happening during. It started in Carter. Actually, I found out here it was late 1960s. So we were going through this even before Carter. But I remember Carter's period got really bad financially with inflation, and then it spilled over into the Reagan era.
Wasn't that like gas line? Wasn't it gas lines and things like that?
Well, the gas
Yes.
Yeah.
crisis of the, what was that, about 77?
It was OPEC. Yeah, it was a little earlier than 77, but then it got really bad. And it started earlier than that, but the height was like 77.
76, 77,
So
something. I
you
remember sitting in the
that.
gas lines. Yeah,
Yeah,
with my
you
mom.
remember being in the gas lines and the odd even plates. And if you had an odd plate, you can go on certain days. And if you had an even plate, you can go on other days. And if you had an odd plate on an even day and you need gas, too bad for you. You're not getting gas that day, right?
Yeah.
Unless you were siphoning it.
And even at that, you were limited. You could only get 5 gallons.
That's true. I
and
forgot
things
about
like that. I mean,
Yeah,
there was actually a limit because the lines were so long.
And do you remember back then they used to be able to go to the auto place and buy locks for your gas cap, right? Because everybody was stealing your gas.
I remember locking gas caps.
Yeah, remember that? Now they don't have them anymore. We don't need these to go gas caps. But anyway, that was all happening in the 80s. So we got up to 16.6%. Now, think about this, guys. People are going 6.6%. This sucks, right? Right?
Or even 7 or 8.
Right.
Even if you want to use those higher numbers. And that's where some of us were like, really?
Yeah, exactly. Now, 1990s, okay? The low interest rate did go down significantly. It went to 6.94 in the 1990s, but the high for that decade was 10.13. The 10.13 was at the beginning of the decade, and then it started slowly going down to the 6.94. 6.94. Where are we today? 6.83. Pretty high, huh? Today,
high.
Really high.
I mean, I'm not getting in. I'm not buying anything until it gets back down to 3. I think
Yeah.
I've established that.
Actually, we'll talk about that in a second. So this is what happened in the 90s. Homebuyers got a bit of relief in the 1990s. Mortgage rates cooled to just below 7% in 1998, and then rose slightly to an average of 7.44 in 1999. Borrowers could thank the dot-com bubble and the rise of the internet for the dip in rates. More specifically, investors moved away from tech stocks and towards bonds and other fixed income investments, pushing mortgage rates down. That's what I want to talk about. That's what happened last week, right? So what happened was when the economy gets bad, in this case in the 1990s, it was the dot-com bubble. People probably don't remember this, but in the dot-com bubble, people were buying stocks just because they were tech stocks. It didn't matter whether the companies behind them were actually making money or not. You were just buying. It's almost like crypto. You were just buying the stock for because it was a technology stock.
Sure.
He didn't care
Well,
if it was making money or not.
And some of them really did. I mean, AOL stock, if you had that when it came out in the 80s and you held on to it for 5 years or something, you made a boatload of money.
Real money. Right.
There were some of them that really did pay out. So, I mean, of course, that was like, oh, really? Oh, all right. Well, I'll buy ABC stock or
but
ABC
what happened
tech
was
stock.
it was kind of a bubble. That's why they call it dot-com bubble, because then everybody woke up after a few years and go, wait a second, why is this company stock so high? They're not doing anything. They're not making anything. They're not making any profit. The only reason why they're making money is because more and more people keep wanting to buy the stock because it's tech stock. And everybody's like, let's take a look at these stocks and figure out what's working, what's not. And then that's how we had that bubble crash. And because the stock market was going down, people were putting their money in the bonds. And then the interest rates started dropping, right? So last week, when the stock market started going down dramatically, normally people would rush into the bond market and that would drop the interest rates. But that isn't what happened. They didn't go to our bonds. So our interest rates started going up. And that's the scary thing that could happen to us at any moment in this market, where we can have this major jolt because of that issue. So we're going to have to keep an eye on that.
Is there a fairly easy answer to, or is it very complicated, where by a lot of investors buying more bonds, why that would lower interest rate? I mean, what's the correlation? What's the reasoning?
As I understand it, I'm not perfect on this, is the more people that want, the more people, it's almost like, you know how when you go to the auction at the courthouse to buy a house, to buy the tax deed, and they start off at a higher interest rate and then the people bid it down. So like it'll start off, hey, I'll buy Jimmy's tax bill because he didn't pay the taxes this year on his property taxes. And the county will say, who wants to pay Jimmy's tax bill? We'll give you 8% interest on the tax bill. And then somebody say, I'll pay 8%. And then Ross goes, I'll take 7.5%. And then I say, I'll take 7%. Right. And the rate's actually going down. And then it goes down to, there's a certain floor that the county says you have to make. And then usually it comes down to that level. And somebody's saying, hey, I'll take 4%. Right. Same thing with the bonds. So the more people that want the bonds, the lower the interest rate they have to offer for people to buy it. But when people don't want the bonds, they got to raise the rate to make it desirable to buy that bond.
I understand that.
So when nobody's buying the bond, they got to raise the rates. And the bond rate, the 10-year treasury bill, is the most direct correlation to mortgage rates, tied to mortgage rates.
So it's a basic supply and demand situation where there's more people that want it, so they can lower the rate.
Right. I don't have to give you as much interest.
In order to attract people to buy the bond, they keep the rates higher. Okay.
Exactly. They raise the interest rates to make it more desirable to people want to buy that bond. So that's why that happens. So, in 1990 was a very good thing of what to show what could happen if things don't go well. And hey, guys, the interest rates got to 10.13 is what I'm trying to tell you here, right? These rates, these aren't some mythical rates that never happened ever. We just went through the 1970s through the 1990s. We're up to 2000 now. And most of the years we were at 8 or 9% during those years for interest rates. Okay, we did get up into the 16s, 18s, but normally 8, 9% was the average, and we're at 6.8 right now, and everybody's, thinking that the Earth is falling.
I paid 8 in 2000 when I bought my house, my original house.
Right. And yep, exactly. Now, mortgage rates in 2000, what happened there? This was actually pretty good for interest rates. The lowest interest rate in the 2000s, 5.04%. The high interest rate for the 2000s, only 8.05%. That's actually low compared to the other decades. Why? We had the Great Recession. And the reason why the interest rates are so low that decade is because of the 05 crisis, or some people call it the 09 crisis, but I call it the 05 crisis.
But when were those rates the lowest?
Let me see here.
I feel like it was
2009.
Oh, okay. Yeah. 2009.
They started out at, they said mortgage rates peaked at 8.05% in the early 2000s before dropping to 5.04 by 2009. So the reason why the interest rates dropped that year, that's the year Lehman Brothers and everybody crashed. So what people don't get when you're asking for these super low interest rates, you said 3% a few minutes ago. You did, right? So what I would say to you is, oh, you want COVID back. And then you'll look at me like I'm crazy. And I'm going to say that's why we had 3% interest rates was COVID.
Well,
so you're asking for a national pandemic to get a lower interest rate. That's what you're doing.
I mean, those were, despite COVID and, having, that whole scenario, like that was, I think the stock market went bananas, the real estate market went bananas. And I think there was a lot of people that did very well during that time.
Of course they did. No, and I'm not saying, but the reason why is like we had to have a national economic crisis
to happen.
But there was a drop too. I mean, the market dropped too, big time, obviously, right when COVID happened, right? Yeah. So there was that, the early to 2020. But with that said, as far as the 3%, what was it? Can we go one more decade to 2010?
We're almost there. Yep, we're
because
almost there.
if I remember right, they were really low. I don't know if they were down to 3%, but weren't they really, really, really super low under? I don't want to give a president the credit or blame, but Obama. From 29, where he was doing where they were kind of combating that. And weren't interest rates really low in the early 2010s?
Yes, you have a really good memory, but let me just wrap up 2020 because it's 2000 because it's really important for people to understand that economics really matter. The culprits for the economic crash and subsequent Great Depression both stem from astronomical growth in the housing market, mainly due to an influx of subprime borrowers. The mortgage payments became too much for the borrowers to handle, and many people found themselves underwater. So with that market, the market before that was the dot-com bubble. In the 2000s, it was the subprime mortgage bubble, right? Now, 2010, getting to Jimmy, because he has a really good memory. Lowest average mortgage rate in the 2010s was only 3.65%. I didn't remember that.
I thought it was in the threes during that time frame. And again, that was to combat that, the problem that happened from 2007 or whatever, average out that time frame. Yeah.
So the high for the year was only 4.69 and the low was 3.65. And it said mortgage rates remain low this decade. They temporarily reversed course in 2014 and again in 2018, with the average rates at 4.17 and 4.54, still 4 times lower than the all-time high, right? And it says the decade ended with an average slightly below 4%. So we're in the threes.
Sure.
Now, what's really important to remember about that, 2014 and 2018. So what happened those years that changed the interest rates? I know exactly, right? 2018 was when the Fed started raising the rates for the first time.
Right.
So the Fed started raising the rates in 2018, and it was Jerome Powell, the same guy that's here now. And what he was afraid is that we were going to have really bad inflation. So in order to cut it off, he started raising the rates. And then by 2019, he says, I think we made a mistake. And then he started backing off. And then we had COVID. And then, we went through there. So 2010s. Now the 2020s, I'm just going to wrap it up really, really quick. 2020s, 2.96%. And for the low for the year and 6.81 for the high for the year. 6.81 for all of 2020s, right? Or where we are right now. 6.81 is the high.
How's 6.81 the high if we got to 8?
It says the highest annual average mortgage rate right now. It's the average, right? So 6.81, even though we're at 6.83 now.
Yeah. All right. And also we got to 8.
Yeah. So I just thought that was a really interesting perspective. So every time that you're asking for the lower interest rate, remember, you're asking for a really bad economy because that's what you're asking for. I'm just telling you.
Pretty much, yeah.
I'm just telling you that. I'm not saying that that's good or bad, but just know what you're asking for. Anyway, I hope you guys have an awesome weekend. Is the Greek coming on?
Actually, coming up right after this, we have a little Florida Panthers Talk Insider, Panthers Insider show for an hour. The Panthers made the playoffs again, so I think the 22nd is their first game 1 against the Tampa Bay Lightning. So we'll get a little Panthers talk, and then the locker room will be coming on from 12 to 2 today here on Real Radio.
Awesome. I hope everybody has a happy week.